What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. Today, am spending some time looking at the Arrived Homes secondary market. If you don't know how to find that, if you just go to Arrived and you click on this little button for secondary market, that'll get you there. Um, they'll have a little countdown, right? This next one is opening in 3 days and 13 hours, 8 minutes and 38 seconds. It's very exciting. This is going to be the first one I get to participate in because you have to have invested on their platform for at least, I think, 60 days prior to the opening of each secondary market. So I had bought one share of one property as soon as I found out that's the way that you get into the secondary market. This is where I think there could be some deals. I don't know if you haven't been watching my channel. I don't think many of the investment properties listed on Arrived, they don't make a ton of sense for me. Obviously you want to do your own due diligence and see if they make sense for you. But at the prices they offer them with the yields and, with the returns that they say that you'll get, even if they're real, are not as high as what I like to get on my investment properties or on my fractional real estate investing. And so I think the real opportunity is going to be buying the secondary market properties if we can pick them up at a discount. And so far, it's a lot to tackle. Like this, this batch of them, it's 105 properties. Figuring out which ones to do due diligence on is a struggle at this point. So I was trying to think about, there's a lot of different ways that you could tackle this. You might pick markets that you want to be in. You might, I think a lot of people are going to sort this by yield and say, hey, which one's got the highest yield? That's what I want to buy. And I think a lot of people, especially a lot of the people that I've seen on other of these fractional real estate platforms, that's what they're looking at first, right? They're looking at yield more than anything else. I don't know if you remember, but I like to say yield is temporary, basis is forever. I think if we're looking for a deep discount, we're probably not going to get it by buying any of these that have really strong yields. Now, that might not be true. Maybe we'll pick some of these and we'll get great discounts on them. But what I did tonight is I started putting a list together. I sorted it the opposite way, right? I said, okay, give me the worst yielding properties. Now, some of these, it might be something wrong with the property, but some of them, it may be like that it is a short-term rental and it's just had some hiccups, right? Or there was, there's all different reasons why yield could be temporarily low. I don't know that's specifically the case with any of these. But if I'm trying to get a great deal on property, if I'm trying, I'm typically looking at a property that's, I'm looking for a little bit of distress. And, that's been my strategy on Lofty. It's worked really well buying the deeply discounted tokens and selling those properties in the real world. Part of me thinks that is going to be the opportunity on Arrived. I think it's also possible that, just getting a discount plus with an okay yield could also potentially work. But I had to pick some way to tackle this and start to put some numbers together. And so that's how I decided to do it. I'm just sorry about that. I had some little pop-up that was bothering me when I was trying to do this. So I started with this list and I started to put together a sheet that's basically just showing me, using the numbers that they've provided, what kind of a premium or discount are they asking me to pay over and above the value that these different sites offer, right? Zillow, Redfin, Realtor. So I'm just going to break down like how I actually put this together and what I'm doing here. Okay, we took this first property, the Palm, right? They're telling you this is their Arrived valuation. It's not necessarily what the tokens are going to trade for. We saw some, or not tokens, but shares are going to trade for. We saw some of these shares trade for a pretty big discount to the Arrived valuation. And so, but this has a terrible yield at that valuation, right? Just 0.7%. I expect that, right? Because I sorted by worst yield. So I opened this up. I clicked on view property. That brings me to this other page. This is where you get all the details of the property. So the first thing I did, okay, so when I'm filling out my sheet, I already have the arrived valuation. So this is what they think a share is worth. I included the yield. This doesn't actually, impact my calculation. On this, I clicked on the financials tab in that once I open the property, and that's where you can find the total shares. The total shares. That number goes here, and then I just multiply the total shares by their evaluation to get the or the market cap or what the value of your equity should be. And then if you click on the details tab and you go down to financial reports, it's going to open up this SEC page. You have to do, it's not the same filing for every property. And so this one actually opens up, you can see there's one for arrived SCR and for arrived SCR2. If you open up some of the long-term rentals, you'll see arrived homes 1 and 2, 3, 4. You might have to just open each one and then search for your property name to find the right one. But what I'm looking for, when you open them is this, right? So this is just filed just yesterday. Some of these were 4 or 5 days old, but they filed all this new info for us. And so this is what I'm interested in when I'm looking for this property, right? I want to know, okay, this is the cash on hand for the property. And so I went through, I put in, okay, cash on hand. I had just already labeled this. So I had reserves, 168, accounts payable. They don't have any on here, so I didn't have any in there. But that's what, all this other stuff I lumped into accounts payable or, accounts receivable and prepaid expenses. Pulled the mortgage info from here. This is obviously just, real simple. They have a lot of these properties have this other debt operational notes related party. What I think is happening here, and I didn't go through and read this to make sure. I think they're just accumulating debt because I'm actually not sure why, because some of them had none, some of them had quite a bit. I don't know if this is just like they're borrowing money from arrived, another entity just because they're losing money on a regular basis. I really am not sure if that's what's going on or not. But that's what it appears to be going on to me. To put that in other debt, accounts payable, were these other liabilities here. I just clumped them all in there. And so I said, okay, we take the market cap, we subtract the reserves and the accounts receivable, prepaid expenses. I'm taking those out because those would be basically, I'm trying to figure out how to compare the property value. So I want to take those out, and then I add in the cost of all the debts, receivables, and everything. And that gives me an implied value for the property. Now, I'm doing, like I always do here, I'm doing guerrilla math, right? This isn't going to get me to, I'm trying to just come up with a number using their, the information that I have, their debt, their cash on hand, shares outstanding, and their value that I can compare to the price of the property. This is not a liquidation value for this asset. If we were to sell it, there'd be expenses. And so the liquidation value would be even worse than this. I'm just trying to quickly come up with a number that I can normalize across all of their properties, so that I can figure out which ones I think are aren't at least not a large premium to the real world price, but hopefully I'll find some that are a true discount. But even if the arrived valuation doesn't put it as a discount, we can also buy these at a discount to the arrived valuation, right? So basically I'm trying to come up with ones that it seems like the arrived valuation is pretty accurate, right? Pretty accurate, or if we get really lucky, their valuation's low. Low? Yes. And so, once I came up with that implied value, then all I did, looked up the property on Zillow. Okay, sold for 625. It's interesting. It thinks it's still exactly that same price, but it has moved quite a bit. Oh, why is that 6? Okay, well, that's interesting. Because this, if you follow the little thing, says 654 is the Zestimate. Is this not actually the Zestimate? Oh, I put the wrong number in. So it should be 655, 600. So I put the wrong number in on this one. I might have done that on a bunch of them. I'm not sure. 655, 600. I have to go back and look. So this was the last sale price, and this is the Zestimate. I screwed that up. Okay, anyway. Then I, did the same thing. Went to Redfin, got their Redfin estimate. Went to Realtor, got their estimate of market value. Plugged those all in, and then compared it to what my implied value was, right? And so did I already mention this? So my implied value is just all that debt I did, plus the market cap. So for this property, it's $962,000. Well, that's a 47% premium over what Zillow thinks it's worth, and it's that much of a premium over Redfin and that much of a premium over Realtor. So this is probably not one that we're going to get if we trust those valuations, right? We're not going to get a discount to that real world value, because you'd have to get a ridiculous, you'd have to get a greater than 47% discount. Well, not really, but you'd have to have a very significant discount off of this 745 number. Excuse me, which is already lower than what they started at. Reminds me, please like and subscribe. In the description of this video, I have links to all of the sites where I'm currently investing in fractional real estate online. Please do your own due diligence on all those sites and any properties that you see on those sites. Don't buy any of this stuff just because I am. I'm sure we have different, risk preferences, time preferences, different amounts of money to put to work. Just because you see me buying a certain amount of some property, it doesn't mean it's the right answer for you. Also, in the description of this video, there's a link to the Discord that I have set up. And, you're welcome to join that. There's a whole bunch of us that talk about fractional real estate investing on a regular basis. I am in there every day, but so are tons of other people that have quite a bit of experience in this space. So please feel free to join us there. But so what I'm describing in this video, though, this doesn't count as due diligence, right? We are doing, like I said, this is just guerrilla math. What I'm trying to do is I'm going to go through and do this. I guess I might end up doing it to all 500 of them. I'm going to, not 500, but it's 105 this time. I'm going to try to come up with a couple different ways to break these up. So I can pick, a number of properties and then compare, because what I don't want is to be in a situation where I want to be ready ahead of time, right? We've got, just like the countdown says, let's see. Oh, where's our countdown go? We only have 3.5 days to figure out which ones I want to buy, buy some of. And I don't want to be in a spot where I see a token or see a share. You can tell I talk about Lofty way too much, right? I'm talking about tokens instead of shares. But I see a share. It seems like it's a great discount. And then I have to go do the due diligence on it, right? Because if I'm doing that, once those shares are listed at a discount, the chance of someone else just coming in and snatching it up because they're just YOLOing and not really digging into it is pretty high. So what I want to do is be ready, and maybe even just put those orders in ahead of time, right? Like, okay, pick the ones that I think are most likely to sell at a price that I want, figure out what type of discount I'm interested in, and just put that order in at that discount as soon as they open up for orders. I think by doing that, I don't know, it's what I'm worried about, and what I see people do quite a bit is, I got this huge discount. Well, it's a huge discount from Arrive's valuation. But, we can see, well, their valuation doesn't necessarily match up with at least some of these third parties. Now, is Zillow or Redfin or Realtor right, or is Arrived right? I don't know. All we can do is trust the data that we have access to. But I'm trying to use this as a way to identify the ones where it looks like for example, this one here, right? The Opry, it's very close. Well, you know what? Now I want to search that one again and see if I was just using the wrong number. So let's pull this up, because I think I probably used the wrong estimate. So let's pull this up. We'll find this property again. Let's see. Purchase price 1.1 million. So this is how I'm just, okay, you've got the address here, because I'm just going to do that. Search. You can see I already, okay. Yeah, okay. So the estimate was lower. 1064800. 10648. So I did that on all of them. I was just not paying close attention. But so, okay. So this one, though, it's still only a 10% premium to what Zillow says. This property is I believe it's a short-term rental, right? Sunrise. Yeah, here's the Airbnb listing. And so we're getting, it's a going concern. We're getting all the furniture. Does it make sense to pay a little bit of a premium? Maybe, right? But so this one is one, and Realtor also showed it as being very close. Now I want to actually double check that too, but I'm pretty sure I wasn't thrown off by the Realtor ones. I was just grabbing the wrong number on these Zillow ones. Which I don't know why. I look at these all the time. I wonder if I do that all the time. If I do, and you've noticed me doing that in other videos, well, first of all, shame on you for not saying something to me ahead of time, right? If I'm screwing stuff up, please let me know. Yeah, estimated market value. So this one appears to be really close to what these third party sites think it's worth. And so, I mean, Redfin has a much different number. But so this is what I'm going to use this for. I'm going to go through these, and then these ones that are close, I'm going to really dig into and see, okay, I'll do my regular due diligence that I've been doing. I'll look at my AirDNA numbers, see if that makes sense. I'll, do all the things like check the flood maps, the crime maps, everything that we normally do for due diligence, and figure out, okay, is this a property that I'm interested in owning a piece of? And then, okay, once it opens up, can I get, what kind of discount? Because obviously I'm not excited about this with a terrible yield at 10% over the current valuation. But if this property gets listed, if tokens on this get listed for a 20 or 30 or 40% discount, which we did see some very large discounts last time, then it becomes very interesting, right? And one of the things that I'll have to do the math on is, okay, how much, because the discount in the share price, you have to remember, is just a discount on the equity, right? Just like on Lofty, where we see sometimes a discount looks amazing, but it's not really that huge of a discount relative to the property because there's so much debt. But this, again, it has relatively low debt. So it could be interesting, right? So that's one that I'm going to dig into further. But I'm going to do this math on a whole bunch of them. Try to identify ones that are going to be my targets. And then from there, maybe pick 4 or 5 that I'll actually do some deep due diligence on, and then just put in low market orders and see what happens, right? As the week progresses, does anybody match those? If not, I'll see what types of discounts are out there. I think that's the only really reasonable way to go about this. I think to try to just see what's on sale and then do the research I think there's a really high likelihood that you'll buy something that you didn't properly due diligence. So that, or I will, right? That's, obviously I'm not one of the things, especially because Arrived is securities, I want to let you know, I'm not telling you how to value that security. This isn't investment advice, right? This is how I'm looking at these deals and how I'm trying to figure out what do I think that real estate is worth, and then can I buy a piece of this deal at a price where I feel good with the value of the real estate, right? And so I'm not this is not an opinion on what this security is worth, just what it's worth to me, and just where I think it will make sense. And so yeah, I don't know. I mean, some of these that are poorly operating, I think one of the things that's going to be really interesting to look at is this other debt line, right? So if the yield's really low and they've taken on a bunch of debt over time and they have um, no reserves, that's going to be a lot more worrisome than if, like, so this first one, right, the Palm, $152,000 in other debt and only $168 in reserve. That makes me think this has been operating poorly for a while. Now we can also go back. That's another thing that we can do when we look at these properties is we can click on this performance tab and then click on the full timeline, and you get some info here. Uh, you can see, okay, the dividend was paused. They did their valuation update. Okay, what was the dividend before that? We can see that. We can also look at the older SEC filings. So there is a lot of info that we can get on this. It's not as much as I'd like to get, like, from some of the other sites, but I think, but because it's cumbersome, right, to get this info, we've got to dig into the SEC filings. We've got to go through this. And then do all our other third-party due diligence platforms, that we're using. It's why I'm not going to do this for 105 properties for this batch or 500 properties overall, at least not anytime soon, right? Maybe eventually I'll have looked through all of them, but initially I'm just trying to come up with a real quick way of seeing, am I overpaying for this property or not? And because that's the number one thing that I care about, right? Of course, I want a strong yield. You'll see, I mean, it's one of the reasons I really like Mogul is they're able to consistently put out properties with decent yields. But even on that platform, which I do have a link to in the description of this video, if you haven't already checked that out, they do still have some where I think they're overpaying for the properties, and so I don't buy those particular ones. Sorry about that. I just had to stop it again. On Mogul, I'm not buying those ones where, I think that they're overpaying to a large degree, but I'm also not requiring the deep discount. So you'll notice that if you've seen me on that platform, the difference is, their business models allow them to spit out a ton of cash. You're getting a good yield, and so your returns on that platform aren't dependent so much on your sale and making a good amount on the sale. If you look at Arrived, even, just their stated returns and the way that they set it up, very little of the return comes from your annual cash flow. Like, when you look at this, they say 0.35 on this one. Well, we know it hasn't been that high, right? When they have their return number, a lot of it's coming from the appreciation. And here, okay, if they think it's 4.5, well, we already know it hasn't been yielding 3.5 so far, so our total return could be even lower. Some of these have been accumulating debt, so, I mean, it could even be a larger problem. And so, because we're not getting those strong yields, it's even more important that we're getting an actual discount to the real world value, not just get, I'm not just willing to pay what it's worth, and then, okay, I'm collecting a nice yield and then also hopefully get some appreciation in the long run. But if not, I'm happy to hold it forever because that yield number is so juicy. This is a situation where, I'm losing money to inflation when I look at that yield. I mean, not if we're getting 3.5%, but if I'm getting that 0.1, 0.2, what at 0.7, yeah, I don't know what, 0.7% yield, less than 1%, obviously I'm losing money holding this So I need it to be at a decent discount so that when that real world sale happens, that's when we make our money, right? It's a much different style of investing that I'm looking at on here. Like I'm looking at Arrived as similar to Lofty, but maybe with some better operations. Definitely where I feel like certain aspects of what they're doing I can trust a little bit better. I'm not as concerned about the platform as a whole. Although still not, still want to do your due diligence on the platform. I'm not saying that there's no risk there. All these platforms have some degree of platform risk. I do believe there's less on Arrived. I mean, that's just my perspective. Uh, but I think that the way to make money on this platform is going to look very similar, right? Neither of them have a bunch of properties that are making tremendous yields, and so the opportunity is in the discount. It's not in the business plan that Arrived has set up for the property, right? It is, okay, they think it's going to make X. A lot of them are actually making, X minus something, but we're going to get it at a discount, and so we're going to get that, the return that they had told us plus the value of our discount as well, and that's what I'm hoping. If you've dug into any of these properties, I mean, this is this is a situation sort of like how Lofty is, where everybody's competing for the same discounted shares, and so I understand if nobody wants to talk specific properties about this one. If there are ones that you've identified that you think you should stay away from but looked good on the surface, that's information we could all share with each other, I think, right? If you've picked out, like, so for example, say I thought, okay, this one looked good on the surface, but I really dug into it and oh nope, I noticed that it's in an AE flood zone, or it's the crime there is unbelievable, or there's some other issue that maybe there was a shooting in the property that you found in the news when you're doing, any of those sorts of things. I know that's a weird one, but it's one that I've come across recently. Any of that sort of stuff, I think that we can share to help each other out to make sure nobody else is blundering. I mean, you don't have to, tell us where your treasure is hidden. But if you do come across ones to worry about, let us all know. I'll try to do the same. I'm going to try to I'm going to do this little analysis on a whole bunch, and then I'm going to try to dig into, hopefully at least get a deep dive into 3 or 4 between now and when the market opens. If I find any that are kind of interesting, maybe not necessarily interesting, like, hey, you should buy this one, because that's never what I'm telling you, right? I'm never telling you what to buy. But I mean, interesting as in, this is a reason I wouldn't buy it. I think it's maybe a better, these are some risks that I uncovered that were a little bit harder. Maybe I'll try to share those. I didn't get my nap in today, so sorry about that. The other thing I think that we all need to bug Limas and have him spin up an arrived assist, just like Lofty assist. I know he had worked a little bit on that. I'm going to have to check in with him and see where that stands, because this is tedious, right? This type of work that we're doing here is pretty tedious. Having to just pull it all out of the SEC filing. I'm sure there's an easy way to do it. It's just not the way I'm doing it. Which reminds me, one thing that I've been thinking about doing on this channel a little bit, I don't think this is a great use of Excel, right? I think that there's probably some automated tool that could, maybe an AI something that could pull all this info together for me a little bit better than what I'm doing. But I do think that Excel is a tool that is still very relevant for real estate investing in general. And I've been thinking about, I use it all the time, and I'm always building like these little models and, amortization tables and, figuring out debt payments and those sorts of things. And I'm curious if anybody would be interested if I started doing short videos on how to do, real estate investing type things in Excel, is that like, is this old man stuff, right? Like, do people not even care about Excel anymore? I notice a lot of people are doing like just asking AI to do their math for them. I think that's like really dangerous because you don't know what you don't know, right? You don't know if it's making assumptions that you miss. I always hate when people even just use online calculators because a lot of times they don't necessarily know everything that's going into each line and the assumptions that are being made. So I've always been a big fan of just building my own models for everything that I do. Um, and I think it's helpful, but I don't know if that's so. I'm just curious if that's content that anybody would be interested in watching. I'd probably just do it in shorts, do like little 2 or 3 minutes. This is how you do this, and and then have them all add up together to be okay. This is the model I'm using to evaluate deals right now. Uh, but yeah, I haven't really decided yet if I think that that's something anybody wants to watch me do, or if there's just like better content out there. If anybody has a good Excel YouTube channel recommendation, I do actually like that stuff. The guy who I used to watch a lot doesn't post anything anymore, and so I don't have one that's teaching me new stuff. And I feel like there's always more to learn about it. Like it is, obviously I'm way too big of a nerd if I'm just talk to you for like 3 minutes about Excel. So anyway, that's going to be it for me for today. I really should have taken a nap before doing this one, so sorry about that. Um, that's it. Until next time, I'm just going to keep making mistakes so that you don't have to.